Hi Jays, Truth Seeker back here with another video. I hope you guys are enjoying the holidays. I just wanted to show you a trade that I took a couple of months ago. This was New Zealand dollar, US dollar. It was a short, and I will explain after why I took this trade. But before I start, if you look at this trade right now and the pattern, can anyone know already what pattern is that? Is that a CERC pattern or is that a CME pattern? And we have here, do you remember the CERC? The consolidation, expansion, retracement, continuation. We have the CME, consolidation, manipulation, expansion. So I think many of you would know already, this is a CERC pattern. And let me just explain here. We have the consolidation here. We have expansion. We have the retracement. And then the money shot continuation. So that is the CERC pattern, which is my favorite pattern. I love CME patterns too. I definitely take more CERC patterns, but I love them both. They're both great. So I will explain after why I took this trade, but I just want to explain two things here first. And if you are familiar with these patterns, maybe you are wondering why I did not enter here. And I will explain this when I'm going through the replay. I will explain exactly my thought process and why I didn't enter here. And I waited until here to enter. And another thing as well is you might be wondering, why is there two fixed value area low? Because we have the fixed POC. I will put this here. So we have the fixed value area high first, and then we have the fixed POC. That's where the highest volume has been traded. And then we have the fixed value area low. So if anyone was wondering, why do I have two fixed value area low? Because I just have the fixed range here. Why do I have two fixed value area low? I will explain why I have the two. Like the first one here, this one here is obviously from the fixed range, and let's erase this here. So you can see this fixed value area low is from here, and the other one I will explain after, and how I actually love to use these fixed value area low under the right circumstances. So I will get started about why I took this trade, and I will answer this as the trade is playing out. So first of all, for the dollar. Now for the dollar, and I did another video, and it was around this time as well. This was a really good time for trading, was when we had that rate cut and the 15th of September. Now this is actually the 18th of September now, but just in the weekly candle, this is where we're at. Now you can see here commercials are at bullish extreme. Retail, they're not at bearish, but they're more bearish than bullish. And one thing as well, and I didn't actually explain this in great detail in the last video, is the open interest. Now if I, just to make this a bit cleaner, I'm going to erase the non-commercials, and I'm going to erase the retail as well. Just show you commercials and open interest, and look at this. Okay, we were down at 50%, and you see this shot up, and I'm okay. So there are a lot of pending contracts, so a lot of people want to enter the market, and we have commercials at a bullish extreme. And if you look back at history as well, this is one of the best examples here. It's when we shot up in July 2023, and look at that look at the open interest and the bullish extreme together, and what happened, we went up from July all the way until October. And if you go back in history as well, you can see this time as well, that open interest was low. We shot up and commercial shot up to bullish extreme. What happens? From March 2022 all the way until September 2022. So that is information that I take very, very seriously. Now, that is the COT data. And also, if we go to the daily time frame, I will explain this here more. Okay. Now, this is daily time frame and the valuation tool, which I absolutely love. So this is actually, usually I just have one of Confluence, but when you actually have two of them together, now obviously I can't evaluate the US dollar against the itself, so it is against the futures market now, and you can see here the Treasury bonds futures. So, and normalization window 50, and you can see here we're not undervalued anymore, but we were. And just look back at history. Now this time was pretty neutral. Actually, this time wasn't. I'm gonna put this up here a bit more. You can see here when we were undervalued, price did go up. This, remember, this is the daily time frame, and look here, price is undervalued. What happened? We went up. And if you just keep going back to history, it's not something that works every time. Like here, we went down, didn't work. Here, we went up, it was bullish for 3 days, so that would have been a good trade. Here, price went up for 3 days and actually went up aggressively before it went down after. And the last one I'm going to show here, December 2024, when we were undervalued, price went up. But as I said before, the valuation is just one confirmation, but when I have that on top of the COT data, so I'm extremely bullish bias for the dollar. And when you come to the New Zealand dollar USD, New Zealand dollar for COT data was pretty neutral. We weren't bullish, weren't bearish. However, for the technicals and fundamentals, well, just New Zealand dollar was just extremely weak. And if you see here actually as well, this is on the 18th. Look at that drop. Look at that bearish candle. And if you see the 18th on the dollar, okay, we went bullish, but it wasn't an extremely bullish candle on the 18th. But you can see that drop. So straight away I'm thinking, okay, New Zealand dollar is extremely weak. And there was another trade as well. Japanese yen was also extremely weak. But yeah, it was a great time to be long against, to be bullish with the dollar when you have fundamentals align. So I will move down here to the 1 hour. And you can see here, so price, if you look at this, you can see we were in this range. Can you see this range right here? So this is the last range. Price already had broken below this range. It had broken below the day before. So when price broke below this range, this was a key level of interest for me. And I have here is a fixed range here because we were after breaking below it, and I have my fixed value area low, and as I explained at the start of the video, that is why there was another fixed value area low. So you can see here when we broke below here, you can see that this fixed value area low has been acting as resistance. Price has not been able to break above it again. So I'm like, okay, this is really interesting. And if I we'll break this down now. Okay, so I'll just press play for the 1 hour. Yeah, we had a few times where price went up, and okay, now price went down again after. I'm gonna go to the 15-minute time frame now and explain this. Okay, now, and what time we got here? So you can see here we have just this consolidation. That's all this is. 15-minute. It's just a consolidation zone right now, and I'm just observing. So this is okay. Asian session on the Friday, and you see price could not break below or break above, and here is where it gets interesting, because we broke below this range. Now if you can see this here, and okay, and we have a fixed value area low here, and that is the mystery solved about why there are two fixed value area low. So I hope that's clear, geez. Now I'll just want to make this as clear as possible. Now, so we broke below that range, and when you break below a range, sometimes there's no retracement back, and yeah, sometimes you just have to leave it go. And here you would be expecting, okay, it's gone, it's not going to come back anymore, and but it does come back, and you can see this rejection. And at the start of the video I said, why didn't I enter here? This is the first rejection, and the answer is I missed it because I was outside and I was just after coming back home. And I remember actually, because I was looking at this and price had been going down, and when I came back and it was literally here, so I was like, you know, what I would have done 1 year ago, I would have just entered, you know, okay, I know it's going to go down, but that has been very bad in the long run. You know, I wouldn't advise anyone to do that. But I think a lot of people understand that feeling when you have a trade plan and you've everything worked out, and you look at the trade and it's gone without you, and it's in some ways it's worse than a loss, because you put all this time and effort into planning it and it's gone already. So but my biggest advice, and this is just coming from hard experience, is you just have to leave it go. And it was very hard to leave this go, but I did. But I kept looking, because I was like, okay, if what happens, you know, what would happen if it would go back again? So I was looking at this, and I was like, okay, this is interesting. Look at this. There was no close above the fixed value area low, and kept getting rejected. Now, and you can see here, we have this consolidation here. I mean, we've got like 4 p.m. This is London session now as well. Nearly 2 hours. Nearly 2 hours consolidation. So if we break below this range, and which I know is going to happen, and okay, and yeah, my stop loss was about here. Just like to give myself some room, and simple 2 to 1. That's what I do. And one more thing actually as well I want to explain is, you see that rejection here. Actually, I'm going to move this out of the way a minute. You see that rejection in the third last candle. We could not make new highs. It couldn't break above the first candle that got rejection. So price action is telling me, okay, we're not bullish yet, and just those rejections. However, because of that second time retracement back up, I halved my risk for the trade because when I do CERC patterns, I want to do it the first time, get a rejection. The second time, and I'm still gathering data on this because it's not often that I take it the second time, but I'm still gathering data on it. In the future, I mightn't go down half risk, but at the moment, if it's if I miss the first one, and if I'm entering after, I will go half risk, and it's just about gathering the data. So this is the 2-to-1, and just press play after then, and yeah, these are, as I think I said in another trade, I wish every trade could be like this, because when it just goes to your take profit so quickly. It was like just a couple of hours, yeah. But yeah, that was the trade, and what was it? It was 2-to-1 and CERC pattern. So yep, I hope you G's learned something new and like this video. And if you do like this video, just please just hit a like and subscribe. I'd really appreciate it. So, and yeah, I will see you guys for the next video. Thanks.